Good morning. Welcome, board members and guests to the May 27th Audit Committee meeting of the CalHFA Board of Directors. We have some handouts. If you'll look at your control panel, there's a handout section. You can find the meeting materials there. We also have the meeting materials available on the CalHFA website under the board meeting section. We have some guest presenters today, and with that, I'll go ahead and turn it over to our new chair, Delilah Sotelo.
Great. Thank you very much, Melissa, and welcome. Good morning, everyone. If we could follow along with our agenda on the screen. If Melissa, I can turn to you and have you do roll call for the committee, please.
Yes. Treasurer Ma?
Yes. Here.
Thank you, Treasurer Ma. Mr. Gunning? Mr. Gunning, I cannot hear you. I'll come back because it appears Mr. Gunning is online. I just can't hear him. Ms. Sotelo?
Present.
And Mr. Gunning, we'll try again. Okay, so we'll go ahead and get started, and hopefully we can work out any audio issues with Mr. Gunning.
Wonderful. Thank you very much. So since we do have a quorum, why don't we go ahead and call the question on the minutes of the November 12th committee meeting. If I can get a motion to approve the minutes, or if there's any comments or questions on them. So, Treasurer Ma, if can I entertain a motion from you to adopt the minutes?
Yes, I move to approve the minutes.
Okay, great. So with that, we'll go ahead and, hearing no objection, we'll go ahead and adopt the minutes for November 12th. Thank you, Melissa. So I wanted to just thank Chair Gunning for appointing me as chair of the audit committee. I have served on the audit committee for now several years, and watching him do it has been helpful and educational, and I really look forward to working with Dawn and the team. Lori especially, she's been super helpful over the years, really trying to understand and look at our financials in a very proactive manner, and has really stayed the course in terms of keeping us focused on the end goal. So Lori, I look forward to working with you more closely as the audit chair, but certainly all the work that you and your team have done for the organization has really paid off, and we appreciate all your help and dedication. So, we have a very good meeting today, a very interesting list of topics, and hopefully it won't take longer than an hour. But with that, I want to go ahead and just open up the agenda and go to the next presentation. So we have, Melissa, I think we have our guest presenters. We have Mandy Merchant, who's the principal of Clifton, Larson, and Allen. There you are, Mandy. So with that, I'm going to go ahead and turn it over to you.
Okay. Well, good afternoon, everyone. Well, afternoon for me, morning for you all. Hope you guys are having a wonderful morning out there. I'm assuming it's very sunny, which it always is whenever I'm there. So we're going to start with, we're going to be on page 3.
Andy, before you get started, I'm sorry. I do see that Michael Gunning has cleared up the technical difficulties. So Melissa, if you want to just recognize that Mr. Gunning has now joined the meeting. And we just can test out your auto, Mr. Gunning. Can you just say hello for us?
Oops, and it looks like we've lost Mr. Gunning.
Yeah, he can't hear us. I'm having him log out, log back in.
Okay.
Okay, great. Okay, so I'll let you go ahead, Matt.
Okay, thank you guys. All right, so Melissa, are you going to handle the slide presentation?
Courtney is handling that.
Oh,
So
Courtney's got
Courtney, yeah, thank you.
Okay, wonderful, guys. All right, so within
I
your
can
board
hear you.
packet. Hi, Mr. Gunning.
Morning. Sorry.
You're welcome. No problems.
There you
All
are.
right. So we'll start out on in the packet, page 3, just kind of like our opening act. Quickly, we will turn to page 4, which is a slide describing CLA. For those of you that don't know us, either at the agency or any of the public, we are the 8th largest CPA firm in the United States. We actually almost have like 7,000 employees now, still about 120 offices, and we still have 9 offices in California. We're working with well over 50 housing clients now, about 10 housing finance agencies we're working with now these days. We're still #1 in the uniform grant audits, and as always, our tagline is one CLA promise. So let's turn to page 5 of the packet. And just right here, I want to introduce and remind everyone that the CLA engagement team, our engagement team has been very consistent over the years. Here and there, we kind of rotate one person in, one person off. But this year it was myself again as the engagement principal. Gabby Miller was the director. Liz Richardson was the senior associate, and Kayla Orris was the associate. So this was the same exact team from last year. So the consistency really helps make the job go smoother every year, and they really know the entity and can really can dig deeper and look into things. I don't know if it's always good for the CalHFA team, but we've really gotten to know you guys and your GL and your systems and your processes, so it makes it really great to have the same team year after year. So let's go to the next slide. Let's go to slide 6. So the comprehensive annual financial report for fiscal year 2020 and 2019 highlights just a reminder of what is within that large document that you all have in this packet that starts on page 20. It's going to have the letter of transmittal, which is prepared by management of CalHFA. It's going to have the GFOA award that you received last year for 2019. It's going to have our auditor's report, which I'm happy to say that we had an unqualified opinion for this year, which is what we've had for every year. There's also the management discussion analysis, which is management's overview of the changes between 2020 and 2019, and then 2019 and 2018. We get into then the financial statements and the footnotes, the supplementary information, which is required information, some of it, but RSI for the pension and OPEB, and some other information that you all present. And then as required for the CAFR is the statistical and statutory information that's all in here. So there's a lot of great information in here. So when you have the time and you want to, if you don't feel like you know enough about CalHFA, you will find out in this report about the finance fund. So let's go to the next slide, slide 7, where we're going to talk about the statement of net position or the balance sheet. And on this slide, what we're showing you is the 2020 balances, the 2019 balances, and the 2018 balances of the assets. And then we're showing you the dollar change between 2020 and 2019 and 2019 and 2018. And so what I like to point out to you all is look at those change columns and look at what's happened. You can see the increases, the decreases, and we're going to kind of like focus on them to see kind of what changed during the year. So if we change to slide 8, I want to explain to you this slide too. This is the liabilities before we get to the changes. So the same thing in this liability spreadsheet too. We're looking at the statement of position, the liabilities from 2020, 2019, and 2018. Again, let's just look at the change column for 2020 and 2019, and we'll go through and explain those on the next slide. All right. So just for all the listeners out there, I'm going to kind of go through these. So on slide 9, cash and investments increased about $108 million due to transfers into the fund. And there were several programs that you guys received some money in from the state. Building homes, jobs programs from the Senate Bill 2, low and moderate income housing program, Assembly Bill 101. offset by the annual debt service payment. So you had money come in that increased cash and investments, and then the money that went out that's required every year on the debt service payments. We also saw a $113 million decrease in programs loans receivables due to the principal payments offset by any new loans. So overall, more pay down versus the issuance, which has been your plan. $461 million decrease in bonds payable, primarily due to early redemptions of about $376 million, and then the annual principal payments of about $85 million. The net pension liability decreased this year about $1.3 million, while the OPEB liability decreased by $8 million. So that's nice to see these overall, decreases. And again, this is based on actuarial assumptions, changes in the allocation method, and then just performance of the plans in the markets. Overall, the pension plans were performing much better in the markets this past year, and that's why you're seeing this decrease of the liability, because there was more assets on hand to cover the liabilities of the OPEB and pension. And then lastly, the swap increased about $24 million due to the increase in fair value and lower interest rates in favor of the counterparty. So does anyone have any questions about the balance sheet, the changes?
Yeah, Mandy, I do. Mandy?
Yeah.
Just that last derivative swap. So Don, we talked at the board meeting that we're almost done with that, but is this significant? Was this 6 months ago? The value, the decrease?
Don,
This
can
will
you?
be 12/31/2019.
Sorry about that. I think, well, go ahead. Who was, is the question, is this expected?
No, I thought we were getting rid of this swap. And so to see this in the audit, I think it's just timing that the value of the swap at that time, 12/31, was decreased, but we're almost out of it anyway, I think is just additional on that last bullet point.
Well, I don't want to misstate anything, so Mandy, correct me if I'm wrong, but when we are getting rid of the last of our variable rate demand obligations this year, and part of that there was a swap transaction with JP Morgan that we're getting rid of as well. But is this line item that you have here, is this the swap as a whole and the changes in fair value
Yes.
of the swap? So in that case, we're not going to have all of our swaps gone. We'll have all of the variable rate demand debt gone, but we won't have all the swaps gone. And you would expect to see a liability increase like this with rates going down because the swaps were all geared towards hedging, future interest rate hikes. So I think it would make sense.
I get it now. Thank you.
I know, Michael, it was pretty, when I was putting this all together, I was like, well, that's weird. They've been getting rid of the derivatives over the years. So, but I mean, 2020 was a wild ride. So, you kind of attribute to that kind of at the end of the year. Anyone else have any questions?
Okay.
All right, so let's go on to the next slide. Let's go to slide 10. And this is going to be the statement of revenue, expenses, and change in net position, or the income statement. Go back one. Yes, perfect. Actually, back one more. Yeah, you're good. Okay. So again, same with this one. We're looking at the income statement of 2020, 2019, and 2018, looking at the changes in the years. And what I like to do is go down to the bottom where it says net position at the beginning of where it says increase, decrease in net position, right before the bolded net position at the beginning of the year. And you can see that there was a $452 million net income versus the $182 million income last year versus the $211 million income in 2018. So I always kind of look at that with a bottom line, and you can see predominantly a lot of that has to do with these transfers in, this additional funding that was coming in the door, not yet spent yet. So that's going to be kind of like a timing. We've seen more of that money go out in 2021. So let's turn to slide 11. And let's talk about those increases and decreases that were in the one column. So again, for everyone, $30 million increase in total other revenues is basically due to the continued growth of the single family TBA market. Also, $3 million increase in the pool pay up securities and $27 million increase in the service or acquisition fee revenue. We also had a $13 million decrease in interest expense, and basically that's gonna, as you pay down your bonds, you're gonna be decreasing your bond interest expenses going out the door. Salaries and general expenses decrease about $22 million, and that's basically due to the proportionate share adjustment that occurred with the OPEB. So there was a change up in the proportionate share, and you guys got a credit about $12.5 million this year that's ran through the current year. The non-operating revenues and expenses increased about $1 million due to the $5 million increase in prepayment penalties, which was offset by $4 million decrease in investment swap revenue. And then lastly, which we kind of already briefly talked about, was the increase in the transfers of the $217 million. And that was the programs we had briefly talked about before, the low and income moderate housing. Hold on, I didn't have the other two names there. Sorry about that. The building homes, and the jobs program. Those all were attributed to that transfer increase.
And so Mandy, on that last point, that's not necessarily program income. It's actually just allocation for program itself.
Right.
So we roll out the program and we start allocating resources from that program. That amount.
Okay. Yeah, it's coming in the
then,
door.
Are we going to spend some time talking about the proportionate share adjustment on the?
I was worried you guys were going to ask that, but we could if you want to. So basically, in a nutshell, how it works is that each year you all are, or the SCO is allocated a proportionate share of the liabilities on the OPEB. And what they say is when you're allocated a proportionate share under GASB is that you must relook at the change every year in the proportionate share. Like if it's material, you're supposed to amortize it. So last year, let's say for hypothetical, because I don't have the percentages in front of me, last year, and think of it this way, like you have, $1 million total liability, and they take like, all the different state departments and then do a percentage next to them. And that's your proportionate share of that total, okay? And then let's say next year something changes and your proportionate share is based on salaries. Let's say the next year you guys go down, someone goes up, that proportionate share changes. The GASB says, okay, you need to look at that change and then determine if there's an adjustment that should be made to kind of the beginning, and you're supposed to amortize it. The state of California and CalPERS has elected to expense it. They do not amortize it. So the change in proportionate share reflected you having more last year and less this year. And so that it flipped it into being, a credit. Does that make sense? It's a very confusing, weird GASB, part of GASB that's a little strange. You don't see this kind of big flip. I've only seen you guys have something like this because you do expense it. Most places amortize.
Yeah, no, that's very, very helpful, and I think that's very clear. Treasurer Ma or Mr. Gunning, do you guys have any questions about that?
No, I'm just glad we talked about it. Thank you, Delo.
I do have another question though.
Oh yes, I'm sorry, go ahead.
Okay, on page 11, interest rate swap and bonds payable. I know Michael just mentioned it earlier. Can you just explain these two charts one more time to me?
On page, oh, you're ahead. We're not there yet. You can't jump ahead.
Oh, sorry.
We're coming. We're on page 9 right now. And then I will explain.
Treasurer Ma, always being ahead, I love it.
Okay, sorry. I'll wait.
No.
Okay, well then if no more questions, then we'll move ahead to the comparative analytics. So starting with page 12, just as an introduction, and then let's go on to page 13, where we were just asking about. So again, what we like to do every year is just kind of see the flow of where everything is the past 5 years. And it is a great question that, again, the derivatives the liability is a couple factors that play into this. Obviously, the number of derivatives you have and the value when you first hedge, the amount of the bond, and then the interest rates, and then how the market is playing out. And as you can see, there had been a dip for a while, and then as the kind of market rates, the interest rates and everything have kind of played into it, we are seeing an increase in this. Maybe next year I'll put in next to it like the number of swaps. And maybe if I have a second, I could try to pull that up, but you can kind of see this increase, and that is purely because of the market. You have not gotten any new swaps at all. They constantly get paid down as available. And then also the bonds payable. So we do expect this to go down because you guys are in the in the TBA market, the MBS market, all that kind of stuff. So you're not playing the bond market right now. So we would expect these to continuously go down until, I'm not sure. What is your guys' plan? Are we gonna get out of the bond market? Or are we about to start playing back in the bond market? I had one HFA got back into it. They had stopped playing in it for a while, and they decided to get back into the bond market.
I think we'll be issuing bonds in the coming years as we have more of our multifamily transactions convert to permanent. So yep. I think that there will definitely be more bonds issued in the next probably 18 months, I would guess.
Okay. Yeah, back east, my Maryland clients, they're just pumping out bonds. And I don't know I'm not that into the finance to understand state by state when it becomes much, certain states it's better to pump into bonds. I know it's a different market everywhere. But yeah, we're seeing them versus out west, not as much. So, okay, well, let's change the page and let's go to slide 14. And again, here is the program loans receivable. And as you can see on here, the program loans receivable have stayed very consistent. Obviously, you're still paying off, you're issuing. The very faint, I want to call it like aqua blue line, you can see that's remained pretty consistent too, which is nice. It means that's your allowance. So you're not seeing any kind of like huge delinquencies that would require you to really build into an allowance. And it's even better to see that, with what happened in 2020, that there wasn't, everyone was so concerned that we were going to see these big increases in allowances. And that hasn't happened yet. And then, so it stayed pretty consistent since the prior year. And we beat up those numbers too. We're always like, are you sure it's big enough? Should it be bigger? So that was pretty good as part of our audit procedures. Any questions?
Any questions? No? Okay, go ahead.
All right, let's go to slide 15. And slide 15 is related to the single audit report, which you guys have a copy of at page 264 of your packet. So obviously every year, because you guys receive over $750,000 in federal awards, we are required to do a single audit. This year, as always, we select the Section 8 program, and I am happy to report there are no findings this year. So hooray for everyone. We look hard. So yeah, everything is really great.
That's because Delilah's in charge. That's why.
That's right. It's like a single-minded focus on no audit report.
Now, all those tests that we go through and kind of pick apart every year, everything was great this year. Didn't have any issues. So, yeah, that's the first time in many years no single audit findings. So congratulations on that one. And also, again, another year no audit findings in the financial statements either. So we would call this a clean report. So you guys should be very proud of that. Single audit report was.
We got to call Tia about that. We got to call Tia and let her know. I'm sorry, Mandy. Good.
Yeah, we'll
definitely
call. And I want to give some shout out to Lori Hamahashi, if I might, for her dogged determination to make sure the program staff were up to snuff. So way to go, Lori.
Thank you, Don.
Yeah, credit goes out to Kate and her group too. So they did a good job.
Success has many fathers and failures an orphan.
That's right. Wonderful.
Okay. If you guys are done celebrating, if you're done celebrating, I'll move on to page 16. All right, so to page 16, this is going to be our required communication, which is in your packet of page 276. So this is our auditor communication to those charged with governance, which is to the audit committee, and just kind of basically like just kind of wrapping our audit up into a 3-page document, which seems impossible, but it's possible. So discloses our responsibilities under generally accepted audit standards. Was there any new accounting policies, estimates, and disclosures? And every year, as we disclose, you guys do have several estimates that are in your work papers or within your financial statements. You have the OPEB, you have the pension, you have the allowance, you have the fair value on your investments and the fair value on your derivatives. So all those estimates are within your financial statements, and that just means that there's a third party involved. There's a management, estimate that kind of goes into there. There were no adjusting journal entries that were needed, and there was no past adjustments that were needed. We haven't really had adjusting journal entry or past adjustment in a couple of years. We thought we got close to one this year, but we were good, and we can talk about the SCO and OPEB and pension later. Also in that packet is the management representation letter, and that is the representation letter that has been signed by Don and Lori and Tia. And then just other matters, nothing really else to kind of lay out there for you all. There was nothing that came to our attention that we had to disclose. The required supplementary information, which is required for the pension and the OPEB, was all clear and concise. And that's really it on the auditor communication. Do you guys have any questions on that? And I think actually, I don't think Tia signed the letter, right? She was gone, just Don and Lori.
I think so.
After I said that, I was like, oh, I misspoke. So, okay. Well then, the next slide 17. What's coming in the future? So just 2 GASB standards that are coming up. I just wanted to bring up GASB 84. I have been speaking to the other HFAs about GASB 84. And we've already kind of reviewed some possible scenarios that would be fiduciary and then decided they weren't. Because these fiduciary funds, sometimes you look at is, the money you're holding for other people, is that a fiduciary fund? And so it kind of came up for like the replacement reserves and all that kind of other accounts you all have, like would that be considered fiduciary? And we did walk through GASB 84 and determine it wasn't. So I guess from going forward, I don't think there's anything that you guys have that would be considered a fiduciary fund, unless you guys start thinking about like what are accounts for employees, for people we serve, that we are holding for them and possibly should be maintained a different way. And I think since we're only presenting the finance fund, we wouldn't include all those fundings that you hold for the state. Or I guess maybe we could consider some of that, Lori, at some point. Not sure, but I haven't dove too much into GASB 84 yet because it keeps getting postponed, and it's a nasty little standard. So, but when we kind of get close to that, we can kind of look into that. And that's where, like on the 3rd line where it says on the 4th line, custodial funds, I think that's the only thing that would maybe come up for you guys.
So,
and then,
Andy, would this create a problem for us given the state's timing on their? Okay.
No, it would be like if we deemed like one of your state programs where you operated for them, and at the end of the day, like the there's the beneficiaries, the state, and all this stuff, and you're operating on their behalf, and there's some fine things like if you're making decisions and they're not, then it doesn't qualify. And so what we would do is you might move that fund that might be in like the single family and multifamily and make it a fiduciary fund. So I don't know the last time you really looked at government-wide financials, but you're a business type activity. You would actually have a separate page behind it that would be called fiduciary. So it's a little different. So the only thing I could think of, and I can walk through it the next like by the end of the year, some of the stuff that you're holding, you're doing on behalf of the state.
Okay.
Okay. And then the last standard, and this has been talked about to exhaustion, but GASB 87, is going into place for you guys 12/31/2022. But if you guys present comparative, so you actually want to be working on it for, I'm sorry, why am I in the wrong year? 6/30. Whew, I got like 12/31 in my brain. You would want to start thinking about it on 6/30/2021. So just for you guys to keep that in mind. But again, you guys have one lease right now.
Yeah, one
I
lease.
can't imagine a lease. I can't imagine you guys have any embedded contracts. We can double check that. The only other thing would be your IT, which is the other GASB, GASB 90 something. That might be possible, just depending on what's going on. There's a lot going on in that IT department, so I need to investigate them. But just to see if there's any leases in there. But again, we'll walk through this process with you guys.
Okay.
All right, slide 18. Any questions from anyone? Did I not answer anything?
No, I think that Treasurer Ma, do you have any questions? Mr. Gunning, do you have any?
No, I don't have any questions. Good
Okay.
report.
I'm sorry, Michael.
Yeah, and as always, you guys, thank you very much for everyone at CalHFA. You guys are wonderful to work with. When we have questions, everything is extremely timely. The staff at CLA enjoy working and learning. It's a great job. So thank you very much for all you do. That's all I got.
Courtney, do we have any public comment? Any public cards? Any public speakers?
Oh, I just wanted to go ahead and thank Mandy and her team too. We put them through a lot this year, and we're going to discuss the reporting timelines a little bit later, Ms. Sotelo, our Chair Sotelo. But we kept getting various dates on when the information from the State Controller's Office would be ready. And, it takes a lot of planning for Mandy and her team. First, we told them it'd be ready in December. Then we told them it'd be ready in January. Then it was February. And then finally it was, the final document was given to us in April. Each one of those times, she's got to get people ready to review. And, and they've got hundreds of other clients that they're working on. So, we're going to pretty much lay out, what had happened probably just this year and in the past years. And, we're just, relying upon external parties to really give us that information. So it's kind of hard to figure out exactly when everything is going to be done. But this year was unprecedented. I mean, this is the latest that we've ever had to report out to the audit committee on June 30th, financial information, which is old now.
Yeah.
So
I think this year. Oh, sorry, Delilah.
No, go ahead. Go ahead.
I think she came to me at I forget what happened, and she was like, "Okay, we need this in like 14 days," and I was like, "What?" Okay, we're on it. But I forgot why it was.
We had no findings.
Like it was time to go. It was on. So we all just like jumped on and got everything done. So
we appreciate that, Mandy. Lori, I actually think it's a good time for maybe Dawn and you to go through that timeline. I think this is the appropriate time in the agenda to do that.
Sure.
Dawn, I did see your hand raised. Did you want to?
Yeah, I just raised my hand. I was just going to echo Lori's comments and just wanted to thank Mandy and her team for their great customer service. They always do a great job, and they're always very accommodating to the needs of the organization. So thank you.
Okay, Lori. Go ahead, Lori.
Then Courtney, would it be possible for you to bring up the document? Oh, okay. And this one doesn't really, is there, oh, it's laid out in separate pages. Okay. So we can go back to the first page. Sorry. Okay, so these are the
And
documents.
Courtney, can you make that full screen so we can see it a little larger? Thank you.
Plus blind.
So, these are the documents that we wait for each year from the controller's office. And one document is the pension accounting elements, and the second one is the other post-employment benefits accounting elements. So after, the SEO has worked with their actuaries to determine, what our proportionate share is, they come out with and suggest entries for you to record those liabilities. And it's not just a single line entry, this is the expenses and liability, and it's a lot of entries. So it's rather complex. And when we actually get the information, we go through a process to make sure that what we're being allocated is correct. We look at last year's, we make sure all the balance forward numbers are correct. We're making sure we're recording the right deferred inflows and outflows as we're required to do. And then we put the entries through our journal ledger, and then we have to go in and pretty much re-round all of the financial statements, because now they actually have the entries, and then go through and create the notes like note 9 and 10 in the CAFR. Not receiving this information timely, what it does is that we have relationships and agreements with a lot of external parties, and such as the U.S. Treasury, HUD, Fannie, our bond investors, and the legislature. We have reporting deadlines to meet, yet we can't meet them because we don't have the information. Okay, there we go. We went back to the Excel version. This is what I wanted to show you. So our statutory reporting deadline is 12/31, and over to the right, you will see for each of the last 3 fiscal years, the dates we actually received the report. And to that, you can easily add 1 month to that time to figure out this is approximately when we can probably come out with the final CAFR and PAFR. For this year, we did receive the pension accounting elements back on January 15th, and we were able to create all the schedules, put the journal entries into the system, rounded up to that date, but then we're still waiting for OPEB before we can actually, complete our cycle. And then once the information is fully recorded, then it does have to go out for up to a week with the first partner and a week for the second partner to review, come back in, and then marketing, does its finishing touches, and then we're actually ready to give it out to everyone. As you can see, each year is it's taken a little bit longer, with the exception of the pension accounting elements coming in early or earlier than the previous year. Last year, it's been later, as you can see. Each year for the OPEB, it's January, and then it moves to February. Now it's April. I cannot tell you how this will improve in the future. I do know that the responsibility will be moving this year, according to our conversations with the state controller's office. We've communicated to them that we need this information more timely, and if they could really, help us out. And we have a lot of information that needs to go out, and it's pretty much delaying our annual ratings that need to be done by Moody's, and even our submission to the government finance officers award programs. And so, Delilah had asked for this, and I think it pretty much explains what, the issues, and then also what could potentially happen. I mean, right now, a lot of what we turn in, if someone's not turning in reports on time, that could affect their future participation or, into new programs with those external parties. It can also delay an upgrade to the agency's rating. That is something that we think that I know that Tim is looking for a AA rating, flat. not I think it's at AA negative right now, but this could all be playing into that. And I know it's really important that we get this information on time, and we're just trying to do our best with obtaining that information.
So, Lori, can't we just have the treasurer talk to the controller and fix all this?
If things were just that simple.
Sorry,
But
Fiona,
you
I
know,
couldn't
we
help
have to,
myself.
yeah, but we have to get audited information. I know that Mandy alluded to something to where earlier, and I need to bring this back up, that she said we almost had to do an adjustment. We almost had, an issue, and that's because they had to bring Mandy in the middle of this and make sure it was okay with our auditors that they didn't opine on one column in one of their reports because of errors that were contained in there. And, it's asking our auditors to make adjustments, and it could adversely affect our audit too. I mean, we would end up with, right, Mandy, we would have, I know she had all the conversations with the California State Auditor around this.
You had a $46 million liability with OPEB liability. 14 million of it was not audited by the SCO. So like you had an actuary determine your overall numbers, but then they do this like proportionate, more proportionate share. They allocate out, these numbers, and this 14 million wasn't. So we just had to go through all our internal people to be like, hey, is this a $14 million like a past adjustment, or are we able to live with this? And luckily we were able to live with it because, we were able to get coverage. We documented that, okay, we had enough coverage of the of that OPEB, but they basically ripped a whole group of people out of their report, and we're just like, yeah, they didn't want a findings, they took it out.
In all seriousness, though, Lori,
Yeah.
it's the controller. Is that the impediment? How is there any? I don't think there's a way, but is there a way to speed this up?
It's CalPERS, right? It's CalPERS.
No, I think it's a combination of things. I think the information has to be audited. CalPERS, I believe, gets their audit done timely. They provide the information to the controllers, who has to break up between all the funds, what the pension liability is and the net OPEB liability, what it is for the fund. They'll give it to you for the state, but the controllers is in charge of breaking it up between all the funds, and we need that fund information.
And isn't the California State Auditor also involved?
Yes, they're the ones tasked with auditing the controller's office. So I mean,
if I recall correctly, I think that the various years that are on the screen, it's been, the SCO, but I think in at least one year that I recall, I thought CSA was also kind of a delay.
Yeah, we know that it's both. I mean, they're getting audited. We have to receive the audited information. Right. So I just think with all the changes and all the methodology changes they've gone through, that's a lot. When they don't stay consistent, then they change their methodology and it goes from year to year to year, then it's going to be a lot of work for whoever's auditing that, that year.
Yeah.
So this is a good identifier, and I think that what I would like to request is that we kind of report back at each of our audit committees to see, if there's any update, any changes, anything that you've heard about the methodology modifications or the timing of, of what we can expect for next year. So let's just keep this in the forefront. Again, there's nothing that we can necessarily do today about it, but I did want to establish the correlation between the tardiness of the reports and its potential impact on our rating and on some of our relationships. And I think that, if the committee members desire, at some point we should report this back to the entire board so that they, understand the pressures of, not necessarily being able to get the rating that we're looking for, the AA rating flat rating that we're.
And our statutory reporting deadline was changed to 12/31. It was originally 11/1. I don't know if Mandy remembers. We used to have these audit committee and report out to the board in November of every year. And now we're in May. Last year, I believe it was April. I'm not too sure, this information, it's already 11 months old.
Yeah. The other thing that I requested for the committee members, just so you know, is that we get, basically a midterm report on all the potential, all the other aspects of the audit and the potential findings in the audit, without having to necessarily wait this long for the OPEB information, so that we get a look at the financials earlier than April, right? This happens again next year. So Don and Lori will work on a schedule and information that we could receive that gives us a better sense of where we stand and other aspects of the agency.
And I'm just going to put it in perspective, like the SEO, like this is the information they're working on is a year behind. So their June 30th, 2019 report was issued March 31st of 2021. Like, that's insane. I mean, they still have to wait, this is, I don't understand what's going on, why they're so far behind. We work with a lot of state pensions too, so.
Well,
That's
Lori, I don't mean to put you on the spot, but I was only half-heartedly kidding. It feels like the delay is the controller. So do we need to say anything, or does that make sense, or we just live with this?
I'm double checking. I think it is the controller. I'm pulling up the CAFR.
Because they get it, and then they got to dissect it, and that's why we get delayed waiting for them to figure out everyone's proportion.
It just depends when they're getting that information, from CalPERS. And then they have to go through their audit process.
So CalPERS June 2019 audit was issued by BDO on November 21st, 2019.
2019.
See.
Yeah, but I can't remember. I have a little bit of, that should be the same. It should be the same information. I would have to tick and tie this out, but this should be, this fund fiduciary should be in here. So yeah, I don't know what they're doing. It seems like the SEO, and I don't know. And I mean, you don't see many places that a state auditor does this, so I don't know if it's too complex for them. But I mean, this is all issued by the state, state controller's office themselves.
So let's maybe Mandy just work with Lori just to add some texture to this chart, and then we'll distribute it again to our committee members, and maybe Treasurer Mott, this is something that you can take a look at and give us the benefit of your advice on how to approach it with the controller.
Okay, I'll work with Chair Gunning.
Great, thank you. Back to you. Okay, great. So thank you, Lori and Dawn, for that. Mandy, I appreciate your help as always. Thank you very much.
No problem. All right, bye everyone.
Well,
have a wonderful Memorial Day weekend.
You as well. Thank you.
Bye.
Bye.
I have to remember how to exit.
Just hit X. So Don, back to you.
Oh, great. Okay. Good morning, Chair Sotelo and members of the Audit Committee. For the record, I'm Don Kabir, the agency's acting executive director. This item was placed on the agenda for informational purposes only. As you may recall from our May 20th board meeting last week, we updated the board on CalHFA's efforts to stand up a mortgage relief program for California using the recently authorized American Rescue Plan Act funds. And as a part of that effort, CalHFA is going to need to contract with multiple vendors for different elements of the program, including staffing for basically a call center to deal with intake issues and eligibility determinations. And that's a model that we used with the legacy Keep Your Home California program that worked really well. And I bring all this up because CLA has expanded their business line to include this type of service. And they, along with several other vendors, have made proposals to CalHFA to provide these services for our mortgage relief program. This is really relevant to this audit committee because if CLA were to be selected in the process, issues of independence would necessitate that CLA would have to step down from their role as CalHFA's auditor. And we as staff would need to work with, per the charter, work with the audit committee to go out and select a new audit firm. At this point, there has been no decision made around this activity that we're seeking proposals on. But we wanted to make the committee aware of it, of this possibility, and to let you know that Lori and her team in fiscal services are always prepared. They're like Eagle Scouts or Boy Scouts or whatever it is. They're always prepared to sort of deal with whatever eventuality comes into to pass. And so I just wanted to make sure that we touch base with the committee to let you know kind of what could possibly happen, and that we would keep you apprised of any changes and more information as it comes available.
And Don, how long would it take if we were to select a new auditor because of this? How long would that process take?
Well, we'd probably go out for a request for qualifications, and it would probably take us, I know, Lori and her team have been sort of looking at RFQ structures, and they've done them in the past. So I think dusting those off and then getting maybe some input from some outside parties about the types of qualifications that are being looked for in the marketplace currently probably take about a month, and then go out with a request and probably leave that out for probably another 30 days. I would handicap it at about a 90-day process, which, given the delays we're experiencing in our audit, it shouldn't be a problem. I mean, in terms of us doing that, as well as, getting somebody on board and doing a transition with CLA if that were to be necessitated. So I'll say 90 days. Lori, do you have any thoughts?
I know Don is always very aggressive with his timelines, but maybe a little 30 days beyond that, just to be a little bit more reasonable with that. I would say that it is a lot of work for us if we had to go out and get a new auditor in here. But if if CLA is able to provide the services we need for the new program, then they will be selected. So this process should go nice and smooth. I think that, like Don said, I think that we have plenty of time. I don't anticipate we receive anything on this year's OPEB or pension until after the end of this year.
I just want to reiterate that we've made no selections to this point. So I think looking at this, if it happens, we'll be able to get somebody on board and sort of transition it if that ends up being needed. And it's not always easy that first year when you're working with a new auditor, but I think it's also sometimes healthy to make a change too. And I think we've talked about that as an audit committee over the years, that CLA does great work and we're happy with their performance, but there's always something to be said about periodically changing your auditor as well. So we'll just sort of have to take what comes depending on how this process works out.
So,
Mr. Gunning, you had your hand raised.
yeah, by way of history, we ended up with CLA because we wanted to get a minority firm. So the last time around, the previous auditor was here 10 years. So it kind of makes sense, as Don is saying, just for all the new rules to rotate, even as much as we like them. But it was hard. And I agree with Lori, particularly because we went out and then we asked folks, when we didn't get any minority firms, we asked firms to co-up, to team up with major principals, and then that didn't work. And so we just like Clifton. So it takes a while, but that might be a consideration, Chair, going forward, if that's important, but it does give us that opportunity to expand who gets to audit. And it is wise to rotate, as much as I love Mandy.
Right. No, I appreciate that. I just wanted to be mindful of the timeline. I know that a decision has not been made on the other, but I wanted us to be mindful on the timeline, because if you and Treasurer Ma do all your magic work and, get the controller to perform on time, I don't want us to fall fall out of the schedule.
But appreciate, it is an opportunity to make sure we have the best team helping the agency. So, let's embrace it and think about it. So.
Great.
Thank you. That's all I had on this item.
Okay. Treasurer Ma, do you have any questions? Okay. We don't have any items for agenda item number 6.
No.
Okay. Great. Thank you, Treasurer. Item number 7, do we have any members of the public, Melissa or Courtney?
We do not have anybody that wishes to make a public comment.
Wonderful. Okay. So with that, I think we can consider a motion to adjourn.
So moved.
So moved.
Wonderful.
Second.
Thank you. Thank you very much. So with that, very successful, right on time, 10:59. Appreciate it.
Great meeting.
Yep.
Nice job, Delilah.
Okay, thank
Bye.
you.
Nice job.
Bye, everybody. Appreciate it. Bye-bye.